Let's go. Hello, everybody. Welcome back.
To the Greyhound Investment page. What's happening, guys? Thank you for joining us again. Like I said in the last video, very quick apology that at the first week of March, we haven't been very active, mainly because I think personally, I just had too much administration work to do and stuff like that with our current running clients, but that's not an excuse. So, as we promised, and we want to continue to be committed to providing informative material to you guys out there on a weekly basis. So this is us again discussing a rather how do I say mm,
Mm-hmm.
in demand topic lah, where people are
Yep.
always trying to compare different methods or different vehicles of investment, and sometimes they unfairly bash us, and then sometimes we unfairly bash them as well. So what we're going to do today is we're going to just lay it out there, and then we will let you make those decisions. Okay, so Darwin will be taking the lead on today's session. He's done quite good amount of work. He was sharing the slides with us before, so I'll actually let him make the introduction and then discuss the topic for today. Oh, hold
All
on.
right.
And then we've got Harvinder here as well. I totally
Let's
forgot to
not forget
introduce you,
him.
lah, bro. Sorry,
Yeah.
sorry.
Hi. No worries, no worries.
Okay, so Harvinder is, like I said before, he's fully, what is this, contracted now. So he submitted his first case already, which is good. And then on the weekend, I think he's got more good news coming. So that's awesome for the agency.
Yep.
Okay, so Dalvin, back to you.
Yeah, sure. Thank you, Arvin. Thank you, Harvinder. Hope you guys can claim your new T-shirt as well, if that's a
Yeah.
thing.
So hopefully Arvinder's not too
Nah,
late, but let's see, he'll make a
yeah.
request.
All right. Okay. Anyway, enough of digressing. I guess let's go back to the topic for today. So, this will probably be the starting of our comparison series that we have initially planned all the way, in the end of December. So we planned a series where we'll be comparing unit trusts against other investment tools that are available out there, at least in Malaysia for now. So first one, which is pretty much in demand. Hang on, let me share my screen first. So pretty much in demand nowadays, it's an upcoming. People always talk about robo advisors. What are those? Who are those? If you may ask, and who runs that? How it is run? Is it legal and all that? So we're just gonna break down some of the very details on a higher level, and all the nitty gritty stuff. I guess pretty much it can be researched on your own lah. Because if we go into every minor detail, I think it's going to take at least a day to
Yeah,
resolve
it might
it.
be too long. But yeah, just touch like the basic
Mm,
of each topic, and then both me and Harvinder will give our views lah according
sure,
to
sure,
your pointers.
definitely. All right. So if you can see this white screen, you can see this, right? Everything loaded on your screen.
So yes, the topic of the day is unit trust versus robo advisors.
All right. So I guess that's good. You can see it, right? So yeah, I just managed to find this picture lah, robots and humans. So brought to you by your favorite agency over here,
Unit
Greyhound
trust agency,
Investments.
yeah.
Yes, so let's get into it, and let's break it down a bit. So a few discussion points, nah, not much, just three, but similarities, the differences, and also just a bit of debunking some common myths and misconceptions that we have in general when it comes to unit trusts versus robo advisors. All right. So let's start off. Arvin and Harinder, of course, along the way, feel free to stop me, and we can get into a small discussion along the way if we
Yeah,
need to.
can. We'll do that.
Yep,
Can, for
Otherwise,
sure.
if you
definitely.
forget, we will just put it till the end lah. Tengok-tengok lah.
Can.
Okay. So, first of all, a little disclaimer before I continue. So, these are all based on the research that I've done. It's nothing written in black and white. So, of course, take this with a pinch of salt and do your due research as well before
Yeah.
you
Do
take
your
any
own
decision, right?
research and do what's comfortable to you at the end of the day.
Hmm. Okay. So we are here merely just to share, Nila. We're not telling here, hey, this is exactly 100% true, but at least 90% what we're going to say here is pretty much on there in the internet, and people's reviews are there. All right. So investment features wise, pretty much same unit trust and robo advisors. You can do lump sum investments. You can just put in 10K at one time if you want to do it, or you want to put it 500 monthly. It's also possible. You also want to do a direct debit. That means you don't have to worry about banking in every month to your investment. Everything is the same. So all the three steps are available. Of course, when it comes down to the minor details, there are going to be variances lah. Okay, and then the second thing, we also have the similarities in terms of KYC features, know your customer or client features, where uh, when in our terms, in our unit trust, agencies, right? So we do have to do a suitability assessment to know whether the client wants to be investing for a very short term, medium term, or long term, and how much do they really want to achieve? Are they saving this for a marriage fund, for example, or retirement, or is just like you want to build generational wealth? All those kind of things are present. And last and not the least, the most important probably, I guess, is identity verification. This is quite a common thing nowadays
Especially with this
especially.
money laundering and all these issues. We
Mm,
want to try to
yes,
avoid those
correct.
things. Yeah.
Correct. That's the word I'm finding for. So money laundering and all these, all these crimes and all.
Identity theft and stuff like that.
Mm.
Yeah.
So identity verification is quite important to make sure that this specific account is tied to this specific person, and those kind of features are really needed lah, especially when we are going online as well, right? Anything so far, gentlemen?
Yeah,
Before
just
I.
to add on,
Mhm.
I'm not sure if most of our clients are aware now that we can actually do the regular saving plans 100% online. We don't have to see each other
Ah,
in person anymore.
yes, high
So
five.
that is that's a major upgrade, massive upgrade on the part of Manulife Investments, and of course the Greyhound Investment Agency is also a beneficiary of this new implementation. So yes, regular saving can be just set up in merely 15-20 minutes and you're sorted. So
Yep.
great move by our company lah. So yeah, that was just something I wanted to share.
Yeah, definitely. Even I'm actually happy for it lah, because now I don't really have to
Basically,
go out and
our
do
whole
anything.
cash transaction can be done via online. We don't
Mm.
have to meet the person anymore.
Yeah, it's so
That's that's
easy.
a that's amazing. Yeah. And I've done so many of these cases. Obviously, we've met them in person. We know of these people, but then sometimes current clients want to just add on their regular savings. We can assist them via Zoom and stuff like that. So simple,
Yep.
man.
Very
Yeah.
simple actually. Yep. All right. So
All
let's
right, can
continue
continue.
with the second part of the similarities. So wait, here we have in terms of global market exposure. So we do get exposure to foreign markets, for example, like US and the Europe as general. More mainly in US, but Europe is a bit of a small portions here and there lah.
Mm-hmm.
Nothing major in US, nothing major in Europe. Sorry, but apart from that, we also have Asia Pacific and emerging markets. So emerging markets, for example, like places like Vietnam, Brazil, all these countries where the economy is rising, and there's new opportunities are being
How
sensed.
about India? Would you consider India emerging market?
Not really, but it is a developing market,
Yeah, I
quite
think it's
established.
you can call it by itself plus standalone economy.
Yes, India, on its own foot, they are very strong. So
Yeah.
they're not really emerging market; they are way past that level already, lah. So
Got to
they are
check that lah.
improving
Got to
already.
double check that.
Mm.
Yeah, it's like
Okay.
China a little bit on their
Yeah.
own.
I think they stand alone as well. Yeah.
Yeah.
China, India, they stand alone.
Yep. But somehow or rather, they still they do get affected by regional changes lah. That's
Yeah,
normal
yeah.
lah, right? And then the third part, we have local markets. And what I mean by local market is our beloved country lah, our Malaysian market as well. So our bursa exposure, which is very important as for us Malaysians, because it's our own country. By investing in our market, we are supporting our economy as well.
And then we
So
also get a chance to
mm,
invest in Top Glove, everyone. Remember how much money we made of Top Glove last year? We
Yep.
yeah.
wouldn't have got that in US.
Yep. Well, yeah, that's definitely some
Supermax and
movement.
Top Glove. Remember both
Some
these
movements
names.
lah.
Yep.
2020 Supermax and Top Glove made your money.
Correct. And I don't think any other sector, but maybe healthcare, right? At the early stages of COVID, would not have done as good as Malaysian market, because we have the gloves, and countries that had glove production, they pretty much survived lah, and they made money lah. After that, who knows what's gonna come?
Yeah, like quarter 3, then everything
Mm,
normalized again. Quarter 4.
correct,
Yeah.
correct. Then moving on to, okay, before I go next, there are some differences in when it comes to exposure to local markets between unit trust and robo advisors. So we'll go into that when once we reach the part of discussing the differences. But on general, there is exposure. How much? We'll discuss that later. All right. And then the next thing here is asset classes. Now, what we mean by asset classes are different type of investment channels that we have. Equity markets. So equities are all the public listed stock market shares and all that stuff lah. Those are equities. And bonds, uh, money market or fixed income. Bonds and money market are considered fixed income anyway. So we do have equities, bonds, money market in both platforms, and also Sharia compliant funds, which is very important, especially for us in Malaysia as well, where Sharia compliance is pretty much on par with on our with conventional requirements for funds over here,
Actually, in
more so in
2020,
Malaysia compared
2021,
anywhere
the
else.
Sharia compliant funds have been doing a little bit better than
Yeah.
the conventional funds. So even I split my investments 50-50 sometimes.
Hmm.
If there's a fund that is Asia Pacific exposure, sometimes what I do is because we non-Muslims, we have the
Mm-hmm.
choice to do it. So we take advantage of both Sharia and conventional, and whichever goes up, be happy. Be happy with that lah.
Yeah.
Yep. Yep.
All right. Although I have to stress it here that it's SARA compliant funds they don't apply to all funds lah. Now, for example,
Yeah,
let's say we take in our Manulife funds we have Progress and Sharia Progress. So
correct.
there's an option for you. Whereas for robo advisors, not going into specific platform here, but there are some robo advisors where it's fully Sharia compliant, whereas another one may say that the funds that we invest in may not be fully Sharia compliant. So at least it is stated
Basically,
clearly
that
that
just means it's not compliant lah.
yes,
Yeah.
correct. So, but of course, this has to be stated clearly, right? As they have mentioned, right? Otherwise, they will not be able to operate in Malaysia, lah.
Yeah.
Okay. And last thing, we also have mixed assets, lah. So, mixed assets is basically a mixture of all these four things above, lah. If equities, bond, money markets, and also Sharia compliant funds, they can be packaged into Sharia compliant mixed asset or conventional mixed assets as well.
For
So,
example,
these
like I guess
are.
the
Mhm.
Hong Flexi funds, Sharia
Yes,
funds, and the
correct.
Hong Flexi conventional funds, or the Manulife Flexi
Mm,
and Sharia and conventional funds, stuff like that. Yeah.
yeah. So that's about it for the similarities. So far, it's pretty much on the common territory. We know lah, even for us as unit trust advisors, when we look at this, we say, oh, okay, I understand. On the core, on the surface, this is what they have as well, which is same as us. Now, before we go forward, anything you like to add on, gentlemen? Nope. Harvinder, Arvin?
Nope.
No. All right.
I'm okay. You can.
Okay. Sure. Then, sorry. Last thing, legal compliance. This is the one thing I forgot. So anything that when it comes to money, securities, especially
Investment. Yep.
investments, so it has to go through Securities Commission. If Securities Commission does not give you the license to operate in Malaysia, that platform is as good as
Yeah, I always
illegal
tell
in
people you
Malaysia.
shouldn't invest in something that is
Mm.
not how do I say, not governed by the SC or Bank Negara lah. No,
Correct.
not to say that it might be. It's a simple platform like eToro. I don't believe it's
It
approved
doesn't
by
have
SC,
yeah, correct. Doesn't.
but it's a safe platform lah.
Yeah.
But then what happens is if it's approved by SC, it's a very it becomes extra safe if you get what I mean. So that the
Mm.
risk factor is very low the company might shut down and lose money and stuff like that. So
Correct.
even I think in terms of Bitcoin trading, you guys were telling me a couple of days ago, there's a Bank Negara approved platform,
It's only
right?
3 in Malaysia at the
Yeah,
moment.
yeah. 3 only, correct.
Even peer-to-peer lending and stuff like that, all Bank Negara approved one. So this stuff,
Correct.
I would be very comfortable to tell my clients who want to diversify their money to do. But if
Yes.
like I'll tell you, like someone I met, they said, oh, so this XYZ type trading company based in Russia. Ah, nah, man, no way.
No way.
Not for me, lah.
Yeah, yeah, definitely not.
Yep.
uh,
Correct. Yeah. And I think when it also comes to securities commission, right, the way normally, for example, like you mentioned, eToro, a very good example. They are a safe platform, but why they are not here in Malaysia, legally approved, quote unquote, legally approved by securities commission is because when you apply for license, you have to pay for the licensing fee every year and whatnot. So, and also in terms of market capture, how much eToro can really capture if they get a license here compared
I
to
know
if they
because
don't
they're
have a
global,
license.
they're global company.
Correct. So is a small market like Malaysia really attractive to them, or do they feel like without a license in Malaysia, they're actually still doing good for Malaysian market? That's their decision to make lah. But for
Yeah,
us, pandai-pandai lah. When it
yeah,
comes to income
pandai-pandai lah,
tax,
correct.
you have to declare it either way.
Yeah.
Yeah. Okay, so now let's jump into the differences lah.
Differences.
Yeah, this is where the sun and the moon can be seen lah. The differences in the day and light, I guess, in between all of this. So first things first, who is the one managing it? Who is doing the thing for you? Well, over here at Unit Trust, at Greyhound, we are the humans lah. We are the ones doing handling your investments, giving you the advice, and on yes, thanks Arwin for pointing out.
Yep, yep.
And we also have professional fund managers who are basically on the top level, who do the day-to-day buying and selling of funds, changing the
Yeah.
allocations to make sure that it's on par with the projected performance. And on the other hand, robos, I'm just going to say as robo lah. It's a bit more nice term to use, robo, right? So on the robos, they have
Algorithms lah, AI and stuff like
algorithms,
that.
correct. But I mean, as a software developer lah, and I'm telling you this, so anything that is computerized, end of the day, is still made by a human. So there is some human element involved, definitely. Not to say there's completely, 100% computerized like the
And I
Terminators,
always tell, I always tell my clients this, right? Investment is a journey, okay? And
Mhm.
investment it's a journey, and the role of an advisor is not only to manage your investments.
Mhm.
Definitely, that's a huge part of it. And I actually believe that 50%, the other 50% role of an advisor, right, is to be able to manage the client's emotions throughout that journey. Because this
Hmm.
journey, right, is not going to be a smooth one. I tell you
Yep,
straight up, it's going to
correct.
be
Correct.
ups and
Correct.
downs. Like this week itself, like the last month in February to now, we've got numbers dropping from 5 to 7%,
Oh,
seven
yes, yes.
percent drop. That's
Yep,
that's not it's not normal. I mean, that's is for somebody who just invested. Suddenly their accounts are looking at negative 13, and then so how do you talk to them? How do you
Correct.
speak to them? How do you chat to them? So and how do you? So that is also a huge part of being able to go through this financial journey lah. So if you're like the scared type, if you know what you're doing, that's fine. If you don't know what you're doing, let me tell you, you need an advisor.
yep.
Yeah.
Yeah,
And we are here
That's
for
the
that
missing
lah.
link in the robo advisor.
correct.
Nobody to
Yeah,
manage you.
that's a
Correct.
huge thing lah. Yeah, you can go to the next points.
Yeah, sure, definitely. And point 2 and 3, the management style and investment approach lah. Although I've separated it, but it comes in hand lah. Now, when it comes to unit trust, the investment approach is stock picking. So, for example, when we say progress fund lah, very simple example. Progress fund is our Malaysian fund, right? So the stocks that they pick, it's not going to be all the Malaysian, all the Bursa listed stocks, right? They're going to pick the ones that are performing well at the moment and companies that have probably good
So
financial
basically, it's a small cap
records,
pick also lah. They pick small cap funds as well.
big, medium, and small. It's a
Progress
mixture.
is a medium small cap fund.
Yep. So it is basically revolves around stock picking lah. So they pick selected teams or maybe selected industries in a certain
Mm.
fund, and the funds that do well. And this
Correct.
is what we mean by active management. So
Yeah.
from day one to day two, the fund manager may decide, hey, for example, now our gloves, back when during the pandemic, our gloves allocation was probably like the most in our funds, and
Correct.
then
Got to
be like,
quickly
hey,
throw
two
in.
months later, throw it before it
Yep.
drops. So this is the active management that they do to ensure your profits are maximized and your losses are minimized. And on the other hand, robos, since they are computerized, right, they they can't really do this human based how to say selections lah sometimes.
Decision making.
Correct. So all they can do is collect data, but as much as future projection, they can't really do much lah.
Yep.
So their investment approach mostly is on exchange traded funds. So ETFs basically they work similar like an index fund where now, for example, if you get 100 ringgit worth of investment, you're going to be given a fraction of that accordingly based on the market size lah. For example, if you take maybe the US stock market, S&P 500, right? Now you invest $1,000 into S&P 500, you're not going to be getting $1,000 of, let's say, only one stock. You'll be getting 1,000, but in smaller portions for everything. Now, let's say Google takes about 10% of S&P 500. That means from your 1,000, 100 is invested into Apple, sorry, in Google, sorry. And the rest, according to the market cap, how big the company is or how small the company is, it is accordingly invested. So if the company performs good or bad, your money is just gonna increase slowly or decrease slowly accordingly as well. That's the idea of ETFs. So it's a very broad coverage, even broader than a conventional like a normal unit trust fund. Uh, but since it takes everything into one package, right? This is where it's easily to do it passively lah. That means if the market cap changes slightly, and then within a few hours or 1 2 days margin, right, the allocations also change. So this is where it's a bit more passive lah. That means there's no human involved. It's just computer, just gonna calculate. Okay, I'm just gonna watch for this allocation. It changes. Okay, then I'm gonna update on my side. Uh, it's a bit difficult to illustrate how it really works.
Certain range as well, because they probably have like auto markers. So if it hits this
Correct.
level, sell. So what happens is if it goes beyond,
Mm,
you don't make. I think lah. I don't know, but I think logically this is what they probably the robos will probably do, because there will be
correct.
indicators: buy, sell, certain point, sell, certain point, because it is
Mm,
automated. It is worked on
correct.
algorithm, so
Yeah.
they probably should work like something like that. Like for us, example like the Chinese funds. I love talking about the Chinese funds because
Yeah.
whatever I bought in 2019, especially
Mm-hmm.
2019, we made a lot of margins there. In 2020, it soared up like for 40%. And then in 2021, no, sorry, in 2020, in 2019, it went up 30%. And then in 2020, it went up another 30%. So that's 50% in like 1.5 years. And then at the start of this year, it went up another 15. So like imagine we had markers for that. We
Yeah.
won't be able to
Yeah.
hit that kind of numbers.
Yep. Yep.
Mm.
Sorry, my
They
neighbor's dog lah.
I mean, like they
I'll just
can.
mute my mic for a while.
Yeah, I mean, they can have all these indicators coming in, telling them what to do. Like what Arwin said, it cannot go beyond those markers. So you just say you already set a
Correct.
TP to take a profit at certain level. So that's where it will stop. It will not go any further than that. Like what Arwin said, lah. Totally agree on that.
Correct. But basically, on the very surface level, it's just basically about managing the size of the allocation lah. Example, if let's say tomorrow Google's share price goes up to 12% in overall US market, then of course in your US ETF that you have, your 100 becomes 120 lah, something like that lah. 120 now is invested in Google, for example. So it's dynamically adjusted, and that's how your money starts to be made lah. And let's say overall, if the ETF makes money, now like example, S&P 500. we know in last year, I think year for the whole year, I think at least made about 15%, 15, 20%, I think. So if S&P goes up to 20%, that means your US investment goes up 20% as well. So it's about there and there, about 1, 2% plus minus lah. Okay. Whereas for unit trust, the variance can be higher because we are selecting certain funds only in certain categories. We're not selecting all the 500 companies, obviously, probably 100 or 150 of those. So it's a bit more concentrated, but the potential is much higher as well. To drop lower also, there's always a potential, but that's where our fund managers are to minimize the losses. And the next thing here, the next 2 points here are portfolio allocation and also portfolio rebalancing. Also, I separated this, but they do come in hand. In terms of allocation lah, now for example, again, for whenever we get a new client or existing client after many years, we want to update their account, right? So hey, he says, let's say I'm fully 100% equities now. Can I go into 50% equities, 50% bonds?
You
Yes,
can do that quite easily lah.
correct. And likewise, for example, you're at 50% bond, 50% equities, you want to go up to 100% equities, also possible. And it's everything is possible. You want to, today you are 100% equities, the next day you want to be 100% bonds, is also possible lah. Of course, it also comes down to the feasibility of it, why you want to do it lah. And that's where the rebalancing also comes into the question. Say 10 years down the road, I've made, for example, 50% of profits. What do I do with it? Can I rebalance it? Can I move it elsewhere? Yes, it can be done. And on the other hand, for robo advisors, they normally follow they also have a risk profiling like we do, all right, but however their allocations are generally fixed. Now for example, they may have like a 30% risk profile or 25% risk profile. Higher means higher returns lah, probably, all right. But what that means is, in let's say the 30% allocation, they'll give you probably 70% stocks, 70% equity, 20% bond, 10% money market, for example. Now, you can't say, hey, I want in this portfolio, I want 100% equities. That's not going to happen. So what they have selected for you is already there for you lah. So it's like one size fit all lah. It's not say like specifically catered to a specific person.
No tailor-made, not tailor-made to your needs lah.
Correct.
And the other thing with especially with regular saving plans, right? Just excuse the dog, neighbor's dog, sorry.
No worries.
Okay, so especially with regular saving plans, right? The best way to do it is 100% equity. So like I think we have gone through like specific videos about this topic. So I'll just remind people here. So if you're doing regular saving on a portfolio, which is like a little bit of bonds, a little bit of money market, you're really not going for that full the potential of it. So
full growth.
Yeah. So this is definitely one huge advantage lah. I believe I just actually thought about it while you're speaking, because if you're not doing a regular saving on 100% equity markets, you are actually not fully capitalizing on the way this instrument is.
Right.
Yeah.
Yep. And yeah, when it comes to rebalancing also lah, for robo advisor platforms, right? Generally, when you want to rebalance, there's only two ways. One, either you switch your risk profile. That means, for example, from 30, I change to 25, or maybe I increase it to 35, for example. Then maybe that's going to give me 90% equities, but still there's going to be some element of fixed income allocation there. Right? Doesn't matter. Or the other way is the robo advisor itself, within that 30% risk profile, that portfolio, right? Within the 30% portfolio, it will rebalance it automatically depending on the market situation. Say, for example, all the way back in the Corona dump or whatever you call it, early COVID days, right? Back in March, April, May 2020. So that's where we saw a lot of rebalancing happen within the risk, within the portfolios itself. So that means from instead of going full equities, it will temporarily go into like protection mode into all bonds and stocks, bonds and fixed income. and then once the market fully dips or starts to recover, then back into equities. So it's all automated by the platform. There's no sense of your own control, but the only thing that you can do is definitely buy low lah. When it dips, you average down your cost. That's another common thing that is in common with unit trust. All right. And fund selection, again, I think I pretty much touched on this as we went on to other points. It's for unit trust, you can select any fund you want. Now, for example, randomly, I come out of nowhere, I say, hey, I don't want US stocks. I know they're doing good, but I don't want. I have a thing against US. I don't want it. Sure, no problem.
Not only
Uh,
that, like I think with fund selection, right, the main thing is, like I always say, is diversification. So if that certain robo fund only gives you a certain amount of diversification, let's say a certain heavy weight to a certain region only, well, if the region works great, you make money. But then, like what we do, right, we try to split it into regions that are unrelated, like US,
mm,
China, India. These are the three main economic strengths that we do. And then we further go and diversify into different products which are non-fully equity by
mm,
nature, but then but they're not equity lah. So they're REITs, and then also the
it's-
commodities funds. So what we
yep,
do is, like, now we split it all into different places, and you never know which is going to fly up. Like this year, the commodities is doing really well already. Wells, like, it's actually surpassed the US
mm,
equity fund. And then if we can have our physical markers and then take the profits and put it here, the chances are that we probably can make more than average lah.
yep, definitely.
So then that's the reality of it. That's why you get advisors. If your advisors is not advising you on these things, then you go for Robo lah. Honestly,
Yeah.
I always speak the truth. I always say these things on the video. If your advisor is not performing, there's so many other platforms out there that are that you can utilize. Yeah,
Yep.
Or other better advisors like us over here lah.
you can do that as well lah.
So
That's not a problem. Yeah,
yep, definitely. So sometimes it's just about it's like finding your right life partner. Or I guess since you gentlemen are married, so you guys know the process. Finding the right partner, and or also in investments, finding the right advisor, finding the right tool is also like finding a life partner also lah. So if one girlfriend, as in one advisor doesn't work, find another that works.
until you get married lah, then you don't
Yep.
change.
All right.
Live happily
Sorry.
ever after.
Yeah.
Correct.
Okay. Jokes aside, gentlemen, but let's see. The last thing that I like to emphasize here is platform maturity lah. So unit trust, as we know, in Malaysia, it has been as early as 1959, 1960s. Although back then it's only one or two companies lah. Now we have over like what 30, 40. I can't even remember how many I've seen in the
Don't know lah,
security
not sure lah.
information page. All right. So in the past 20 to 30 years, unit trust has been maturing and has been really establishing itself as a very solid investment tool lah. Those who have invested back all the way in the 1980s, 90s onwards, today they're just sitting millionaires, uh, sitting in their garage, just drinking tea every
Chilling
morning,
lah.
chilling, nothing much to do. So it is a proven method to grow your savings, to grow your investments, and it grows
Correct.
your wealth, right? Robo advisors, on the other hand, they're still relatively new lah. So this is like the grandfather and the grandson comparison lah in per se lah. Okay, so it's the new hot-headed fella in the town. So very energetic. They have new ideas, new approach to same things, investment, same classes, everything, but it's just their approach is different lah. So maturity wise, they have been here at least about 5 years already, since early 2015, 16 onwards. They have pretty much been here in Malaysia. So that's about the major differences that we have when it comes to unit trusts and robo advisors. Again, this all based on my own research, so take it with a pinch of salt. Anything, just DM me, tell us if you feel anything different. Feel free to leave it down in the comments. All right. And next, what else? So, well, I didn't have a proper topic, so I just put it as what else. uh, so Now, the main thing here is probably if this is for someone who wants to get invested, start investing, right? Uh, there are always some things that you
EPF
want to know.
investment scheme,
Mm.
EMIS, I think.
Then I'll reveal in
EPF
the end lah.
investments.
Let's. I intentionally left it blank for now.
Yeah,
Let's go to the other one. Now, for minimum investment, right? Over here in Manulife Investments, and to get started with your investment, the only thing you need to do is your monthly commitment to your own growth is only 100 ringgit per month. That's as low as you can get.
there's very little.
Very easy, yeah. So anyone who's working, 100 is easily doable for you. And for robo advisors, it's actually platform dependent lah, and also depending on the type of investment you're doing. Are you going into the fixed income markets, like money markets only, or are you going into like the risk profiled portfolios, for example, 30%, 35? So pretty much most equities. So there will be platform to platform differences. Some offer zero fees. Some only some offer zero minimum investment. Some say it's like 50, some are 100, but some are 10. But in general, the range is very affordable. It's about the same only. And when it comes to service charge, now the reason you see here it's higher than robo advisors for unit trust, and likewise robo advisors cheaper. All right. The reason, like I like to point out here, is because we have here, when you go back to the previous slide, right, we have a different management approach. Unit trust has active selection and a stock picking approach to the investments, whereas robo advisors are more on investing in ETFs, and they are passively managed, so they don't have to change, take out certain funds and put in certain funds. All the funds are there. It's just algorithms are measuring how much to increase or decrease accordingly. So those kind of differences are the reason why you see anywhere also, like if you look up for unit trust versus robo advisor review, you will see that everyone will agree that uh, robo advisors have a lower charge. But what are you really paying for if you investing in
I'll
unit
give you
trust?
a very clear,
Hmm.
very real
Maybe
situation which
Arvin,
happened to me
maybe you
last
can
week.
expand on this. Yeah,
Very
go ahead.
easily, very happily also. I always talk about this. And for me, service charge doesn't matter. It shouldn't matter because, if we as advisors are offering our services, we are offering it properly, and service charge should be there because that's our income, basically, lah. Okay, so there's a robot and there's a human. So a robot's not going to service you like a human's going to service you. End of story. So that's why you pay us a little bit more, and that's fine. And number two, uh, like us, right? I give you this is a real example. So one of my clients invested with me 3 months ago, 2 months ago, and then suddenly he
Mhm.
realized, hey, I can go into such and such platforms, and the fees is like so much less than what you guys are doing. And I
Uh-huh.
said, if you know what to do, go ahead, no problem.
Ah,
I'm absolutely okay with that because if you know what you're doing, you should do it because it,
yep,
it will save
definitely.
you money. Okay, and I'm very open about this to everyone. And guess what? A month later, 1 month later, the third month, he comes back. He said, I think I'll go with you. Lah. So I didn't ask him anything.
Oh.
And then he signed up with the RSP online,
Mhm.
1,000 ringgit RSP per month. And then within the conversation, he went, I went and bought the Chinese funds and it dropped. And when my first purchase, I never told him to buy Chinese funds because we know why not to buy the Chinese funds at that point of time. So what I did was I told him to buy another XYZ fund. I'll just say the commodities fund. And that fund
Uh-huh.
with fees have moved so much better than what he had purchased.
I see.
So now,
Okay.
what are you actually paying for? You're paying for us, or you're just paying? What are you saving? That's the question. You're actually
Right.
saving nothing at the end of the day because what you're paying us is our expertise. Because we do this day in, day out, day in, day out.
Right.
We look at numbers day in, day out. So you can't. I mean, if you're not willing to pay us that fees, then we're not willing to give you the information, lah.
Right. I
Simple
mean,
only.
this
Exactly.
reminds me. I think Harvinder and I were having about this conversation about fees and all. You know, where when we talk about other forms of investment that about like stocks and also forex and all these other forms of investment, right? Where generally in these higher risk categories of investment, there are people who actually willing to pay 50 to 100 ringgit per month just to be in a Telegram group to
Yeah.
get trade signals so
Information.
that they can
Yep.
make so that they can make good returns. So when they are trading in the higher range, yet they are investing and trading in the ranges of thousands, hundreds of thousands daily. All right, for them to pay hundreds, 200s just to be in a group that gives you the best
Information.
advice, it's a good trade-off for them. They're like, okay, mind if I'm going to pay like 100 per month, but at the same time I'm able to make 2,000 a month easily, then what is that 100 to me,
Yep.
compared to if I don't pay that 100, I'm only going to make about 1,000. That means I'm missing out on some good tips over here.
I'll
So
tell you a real story as
mm,
well. One of my clients who's invested with me 600 ringgit RSP a month, and then he goes on and invest in Robo advisory for 1,000 ringgit. So he's done a little bit more on 1,000. So
mhm.
we review our clients very often. So I say, hey, what are you making on that side? So I think he's making somewhere about 16 or something percent lah total. And I said, oh, okay. So do you know how much you're making with me? And this is, of
Uh-huh.
course, we've done switches in between and stuff like that. I say you're making about 22%, and that's effectively about 4 to 6% more total
Oh,
investment
okay.
around the same time period lah. So now, how that's net after paying me fees. For me,
Yeah,
it's
okay,
like,
yeah,
what are
correct.
you talking about? There's no the discussion of fees is not even there anymore.
Yep.
Hmm.
So because what we do is we buy at the right time, we sell at the right time. When you come and buy, we don't just say okay buy now. We wait. We might wait like example. I had in submissions for like Thursday, Friday, but I purposely submitted on Monday because I saw the market dropping. I have a few more I didn't submit today because I say wait, hold and see tomorrow maybe. So we wait, and we catch the right prices. And when we catch the right prices, right, your fees can be made up in about 5 days.
Yep. Yeah.
You don't have to talk about trying to catch that margin in a week or in a year. We can get it done in a
Hmm.
few days if we get it right. Chances are we normally do lah. So that's why you pay us a fee lah. Simple as that.
Hmm. Correct. And also another the next point here is like a financial planning advice, right? Beyond just investment advice for unit trusts, trust me lah, if you get in touch with any of us, right, we're going to be talking a lot more than unit trusts.
Yeah.
Harvinder and I think Harvinder the other day, was it on Sunday 6 a.m. bro? Uh,
Yeah. 6
you
a.m.
posted you posted a link about something about the stock market, the current
Yeah.
happenings, and then we just started our conversation, and then we took it offline, and about 2 hours we were chatting about real estate, P2P, crypto, and then stocks, unit trust, everything. We were just talking all over the place.
Yep.
So, and just the other day as well, one of my clients just called me up for top up. After the top up was done, we were just on the phone about another 45 minutes, just talking, what are the things that we can do,
You can
properties,
do, yeah.
stocks, what are the ways we can look at, to analyze markets and all. So you get
You have to
into
talk
more.
about that high risk stuff. You don't have to talk about
Hmm,
that. That's beyond the risk. I even talk about the stuff that is lower.
correct.
I say, hey, have you got yourself insured or not?
Ah,
Yep. Yep.
Simple stuff like that. That's also part of financial planning. Have you got your
correct.
insurances sorted? Why are you investing if you haven't got a medical card? Stuff like that.
Hmm,
So this is the real talk that we do. We don't just like come and say, hey, buy lah for the sake of buying. We make
correct.
sure that actually when we meet you, for really newcomers, we actually draw a pie chart for you, and then we help you distribute your money. We actually tell you, okay, this is how much you need to put. Do you have this money?
Yes.
If you don't have this money, okay, just invest this much or this much or this much. Are you doing A, B, C, D before investing? So we take you through a process. We just don't say like, hey, just put lah money, make money, you can make money. No such thing. We not pasar malam
Mhm.
lah, bro.
Yeah. Yeah. Correct. In fact, the other day I
So
was
we take
talking
you through
to.
a journey. We take you through a journey and make sure that you be able to allocate what you can afford and how much you should be.
Yeah. Exactly. Yeah. Like I was saying, I met this guy. He actually graduated about 2 years ago. So he was telling me that he wants to buy a car, And as a fresh grad, it's the salary is quite low, and he was telling me he wants to buy a Myvi whereby he's going to be committing about 600 ringgit. So I was telling him, why are you committing so high? You might be, might as well look into something like Axia or buy a second-hand car. So why do you need a new car? So these are the kind of things that we can offer, which the robos cannot offer, right? So we can give them this kind of suggestion so that they can save their money and buy something that's more value actually. What's the difference? You're just going to get from point A to point B, and you're single anyway.
Correct,
You do not have a family.
Simple things like understanding asset liabilities, like you said, like
Yeah.
there's no value in that maybe.
Yeah.
Correct.
Okay, give me a second, guys. I'm just gonna have to plug in my charger. You guys continue the conversation.
Sure, no
Okay,
problem.
all right.
And also when it comes to like this free advice that we give, right? It's free, guys. Free, FREE.
Yeah.
You know, there are people out there, millionaires and billionaires, who willing to pay thousands or hundreds of thousands to professional, fully certified, like fully qualified, whatever, financial advisors to give them this advice, and this free, simple advice that we are giving to you as well. And yet, if you're not really listening and trying to at least make an effort to make use of the free information that we're giving, then I think you're just wasting your time in your life already. If people are willing to pay thousands, sometimes even hundreds of thousands for this kind of
I
advisors.
think one of the things that we decided at the start was like, if we're going to do videos out here, we're not going to be stingy with information. We're not going to do dangle a carrot and then we're going to say like, okay, join us for this webinar and then $50 and then we'll give you more information. So that's something that I disagreed with. We didn't want to do that. I said, if you're going to give information out, let's be super generous. And if people want to engage us, they can. And actually, to be honest, I know people, and I do have clients who are EPF clients with me because they don't have another choice, but they are cash investors with other platforms. And whenever I'm on the phone with them, I like today basically one of my clients, I said, hey, you can look at this fund just go and buy off that platform yourself. We still do it for free because just be generous with information. So I guess the more you give, the more you get back. But you know what? He still gives me his EPF funds and I still manage, and he's still my client at the end of the day. But if he's not my client and if he constantly calls me for information, there will be a time where I stop answering.
Yeah, I mean, we do give our services, we share our things, but if you're trying to take advantage of the things also, then it's not nice because end of the day, we are also doing these things as a means of living.
Right, we're all earning an honest income, and we'll be providing our service and what we know to you to grow your savings and at the same time grow our income. So it's a win-win. So we're not doing anyone a favor for free, but of course, everything has to be a win-win situation.
Yep. Right.
Yeah.
And
cool. I think that's a lot about service charge.
Yeah. That's always the main discussion, actually, Arvin, to be very honest.
That's a huge discussion,
The first thing that if you just Google unit trust versus robo advisors, enter in Google, you're gonna see all the different reviews. They're gonna mention the service charge, this and that.
Now tell me this.
I'm better doing this, that.
Correct. See, let's just say this, right? So I know one of the more popular robo investors. I think they declared a profit of 26% for their highest risk investment. I can't remember. Maybe somewhere around there. Okay. But now let me ask you, we have one fund that did a negative 6%, which is the Indonesian fund last year. Okay. So year to year, it did negative 6, but there it did 24%. But our clients made 30% more than these robo advisors funds, but less than the year to date. How did we do it? So we know what we're doing. Simple as that. The numbers are real. We're not cooking stuff up. You come and ask me, I'll show you. So this is why you pay us a fee.
Okay, the last point here, it's simple performance metrics. How we measure how much we have gained, how much we have lost, or whatever, profit and loss, basically, how do you calculate it? In unit trust, it's very simple. We are using simple return. So that means if you invested 1,000, your value by the end of the 1 year is 1,100, that means you have made 10% profit lah. All right. Whereas in it doesn't matter whether you're doing monthly or it's a lump sum investment. We just want to see at a given point how much is your profit against your initial investment. Right. And this, on the other hand, when we talk about robo advisors, they generally use money weighted returns and also time weighted returns lah. What this generally mean is, as far as I can understand lah, probably Janet would understand this more because these things are mentioned in the CFP courses that they do. So probably we should, probably go back and ask him a bit lah about this. But what this generally means is like, for example, if you're doing monthly regular saving, right? So example, the 100 ringgit that I put in today, by the end of next month becomes 101, for example. So it's like a 1% profit. And then they have a different way of measuring. So that means the money weighted return and time weighted return is just like how much money you have made in the given intervals leading up until today. Now, it can be a bit misleading because, like I've said again, I have seen a few videos where people say, my portfolio, this XXX robo advisor, XYZ robo advisor, they're showing my portfolio return is 24% this year. But then when you crunch down the actual numbers, say for example, 1,000 only became 1,100. That's a profit of only 10%. Correct. Simple returns is only about 10%, but the time weighted return shows you 24%. Why is that? That's because maybe the ones that you invested in January 2020 have made you all the way till December about 40%, for example. And then the ones that you invested in
from the cost of
averaging. So it's
that's a very huge, that's a common problem all of us face. That's a huge problem because I'll tell you another situation. All the situations you're saying, I faced them real life already. So I had one client, so in between investing with me, what he did was during MCO last year, which is fine with me. He went and invested with another unit trust company. Okay, and during MCO, his funds moved for 40%.
In unit trust.
So he's like, hey, bro, why is yours only 20% and why is that 40%? So I said, how much you put? He said, about 10,000 lah. I said, okay, do the next withdrawal, go and put 10,000 there. The numbers will drop to 20% immediately. I can guarantee you. Oh, how come? I said, let me write. So you write down on the paper and explain to them. And I said, if you take that investment at that particular time and you've put that the same thing with me, and you look at this as isolation, I would have given you 40% as well. Yeah. It's no difference. So this is what sometimes I guess people need to understand. That,
you can illustrate it here, Arwin, for example. Like, let's say we have 1,000 invested, kan? So, and then the profits, you get, how much was it? 40%.
Okay, so far,
1,400 for example, right? All right, so that means you have made here 40%. Okay, plus 40% lah. But of course, that means your initial investment is 1,000 here, right? Now you add in, like you say, just add another 1,000.
So he's like, because he's done over the years with me, so it's come to a very nice 8 to 10% return. They say, hey, I'm making 40, why are you making only 10? So I say, if you go and add another 1,000 here, the market's not going to jump another 40. The market might actually contract. It might drop to about 38%.
So
let's just say it still remains constant.
2,000, right? Let me complete. I mean, that's okay. That means now he has invested 2,000 in total, right?
2,000, and then profit is 400 still lah, because market hasn't moved.
Profit is still 400. That's the thing. So when you do the math here, you're only getting 20% profit lah.
20%.
Correct.
Yeah. So immediately your profit will be diluted. But this 40% you have made on your initial 1,000. The next 1,000 that you put, you're not making any profit yet.
Yeah.
That's
so what if the market drops? If the market drops to 380, this percentage will drop further.
Correct.
It double down as well. So that's why we have to be very careful. People have to be very careful. Especially those, I always tell my clients, especially those who bought mid-2020, your expectations of unit trust is too high because they are making crazy numbers. Because the next investments that they bring in, the numbers are going to average down. Because those who invested 2019, 18, 19, their numbers already average. They are in a very nice space, 8, 10%, 8, 10%. Those who are invested in 2020, right, their numbers are flying at the moment. So the more they buy, the more this thing is going to drop down. So they have to be real.
Just don't mind me drawing a snowman. All right. Okay, so now let's go back to the slides. Probably the last one lah. So we're pretty much done here. And oops. Oh, don't tell me it's going to start again. No.
Fast forward.
Fast forward. Just ignore this is not happening. Okay. Okay, so we're pretty much done here. Now we have seen that what are the differences, what are the things that we can actually derive from this discussion here. I know it's been a very long one. It's been an exceptionally long one, but this is basically an in-depth comparison that we can provide to all our viewers out there lah. And then the rest is also definitely up to you how we want to consider it.
Correct. And, at least come and speak to us, see the returns that we have provided to our clients, inclusive fees, net numbers. So, and then you can make those comparisons. Like if you're going to look year-to-year returns, it can be actually very misleading because there's also something called window dressing. So I don't know if clients know this or not. So what happens towards the end of the year, every single December, what people do is they will push the market up. They will liquidate funds and stuff like that to increase the number at the end of the year. So it can jump up. Like I said, like example, another fund, India fund. Okay, so last year, I think net closing 14%, correct?
Yep.
Okay, but my clients made an average of 22+% on the Indian equity. How? Simple, because of buying times, buying trends, and where do you buy, where do you sell, and stuff like that. So yeah, the last number can always be very misleading. They will tell you like, hey, net, here higher what, there higher what. But if you don't understand the journey and the process, then you don't understand the journey and the process lah. That's all it is. Then you just will be, when you go through the process, you'll be like, why am I not making the 24 I'm supposed to be making? Or why else, like if someone else who like us can actually provide you bigger numbers. So come and speak to us before making a decision and let us show you real numbers and then with fees or whatever not. And then you can make the decision from there.
Yeah. Right. The final thing, investing using your EPF savings.
You left that. Okay.
In unit trust, yes, you can do it. So if you have a sufficient amount of savings saved up, according to whatever EPF's, rules or regulations are, you can go ahead and we are here to help you out with that. But as for now in Robo Advisors, you're only able to do cash investments. So if you're looking to diversify your EPF savings elsewhere, unit trust is your only option at the moment.
The only option lah. So you can go whichever unit trust company you want, and then but yeah, come to us. We'll look after your accounts well.
Yeah lah. Probably once in a while you get to have hangout sessions with us. Yeah.
I mean, I think there was I think among our group I shared that the how do I say, the dividend payouts for EPF is increasing year by year, and the difficulty of paying that out is quite large. Maybe we can do a video on that on another day.
Yeah. Percentage-wise,
why you should diversify a certain portion out just to also try to maximize your. So we're not allowed to do comparisons, but what we can say, you can try to maximize your EPF savings, and especially because we are able to invest this amount into different regions as well, like Asia Pacific, India. So you can take this money and put it outside of Malaysia as well. So it gives you a nice amount of diversification and potentially, maximize it to a bit nicer number. So that's basically it.
Right. So since we're done, now those who are watching, of course, swipe up or whatever, hit the like. If you're watching this on YouTube, click the subscribe, hit the bell, then definitely follow us. If you're watching this on Facebook, you're probably already following us. If you're watching this for a first time, definitely follow us. We'll be posting very regularly, at least once a week. That's what we promise ourselves.
The first 9 days of March, we kind of missed out. I'll be honest with you, man. I was so full
Vacation
work.
lah, vacation day for us.
So it wasn't a vacation, man. I wish I wasn't that busy, but but
Uh,
but that's okay. Happens
mm.
sometimes.
And then we also have Instagram. Okay, for Facebook, Arvin's managing it mainly. So most of them you can see Arvin posting his personal stuff over in Facebook. I prefer to go more on Instagram where I feel a bit more homely with the younger generation. So I'm on Instagram. So if you see me over there, definitely follow me. And pretty much same content here and there. Just different faces are talking about the same thing lah. And over in YouTube, it's co-managed by me and Arvin at the moment. So sometimes I will be like posting some stuff. Sometimes I'll be posting some stuff. So definitely follow us. I can't get the ad name for the channel, but as you can see, if you go to YouTube, search for Greyhound Investments and you see our logo, that's pretty much us lah. Okay. And Harinder, I heard that you are having a new Instagram channel soon. Maybe you'd like to
Yep,
announce
yep,
that.
yep. Soon, I think the next
Soon?
video
All right.
probably I can announce that.
Okay, sure.
Ah, cool.
Yeah, we'll include that as well.
Yep.
You
So
can do Harvinder
maybe
the
include that
Greyhound.
lah.
Yep, definitely.
Yep. Maybe we'll start to think of a naming convention lah, since probably many of us will be on the same platform, right? Like for example, currently it's like Greyhound Investments _ Dalvin. Maybe we'll come up with a new convention for everyone to be synchronized for our members at least.
Yeah, we'll have to figure that out lah eventually.
Yeah.
Yep.
Yeah. So I guess that's part of growing the agency, growing the group.
I mean, we've made a significant, I think, structural changes this year. I think we've made very welcoming changes, especially with Let's Talk Unit Trust sessions. We had 2 already, and those have actually got in good numbers. And I'm surprised the people are coming in from randoms are coming in, which is great because our invitation is going out there. And then we also finally started a proper structured agency meeting.
Oh
Yep.
yes,
It was
which I
fun
missed.
also. Yeah. All right, guys. Anything else? Otherwise, I think we can log off lah.
Yeah, I think we're
Yeah.
pretty much done here. So yeah, thanks as usual. Thank you to everyone for tuning in. And we've been your hosts, Arwin, Dalvin, and Harvinder. We'd like to sign out and take care, everybody, wherever you are. Please stay safe and have a good day. Happy investing and goodbye.
All
Bye.
right, guys. Ciao. Take care.
Bye.
Ciao.